All right, we'll go ahead and get started. Hello, everybody. Thank you for joining us. I'm Bridget Howard, Senior Marketing Director with Consero. I'm so glad you've joined us for today's discussion, Raising Capital During COVID-19. This is an investor's perspective. During the end, we will save the last 10 minutes for Q&A. So go ahead and type in your questions throughout the discussion as they come up. Go ahead and put those questions in, and we will try to tackle everything at the end. Right now, I'd like to introduce you to your panel moderator, Natalie Townsend, who is the Vice President of Sales for Consero. Natalie, why don't you tell us a little bit more about Consero and a little bit more about what we'll be discussing today?
Awesome. Thanks, Bridget. So a little bit more about Consero. We are the industry leader in finance as a service. And for those of you that don't know what that means, we basically help investor-backed companies by providing all of the accounting software, process, and services to help companies scale and grow. So I'm really excited to introduce the panelists to you today. So to kick it off, I think let's kick it over to Thomas, and maybe you can introduce yourself and tell everyone a little bit more about the firm and what you invest in.
Absolutely. Hi, I'm Thomas Kershiznik with 5 Elms Capital. 5 Elms is a growth equity firm focused on investing in B2B SaaS businesses outside of Silicon Valley. This includes businesses here in the States and international businesses looking to expand their presence in North America. We've been around for about 12 years and are currently investing out of our 4th fund, backing businesses doing anywhere from kind of 2 to 20 million in recurring revenue, and writing checks anywhere from 5 to 40 million, with the majority of our capital going towards expanding sales and marketing efforts, supporting M&A initiatives, and providing liquidity to founders and early shareholders.
Awesome. Thanks, Thomas. Holly?
Hi, everyone. I'm Holly Maloney. I'm a managing director at General Catalyst. We were founded about 20 years ago with the promise of entrepreneurs backing entrepreneurs throughout any phase of their journey. So we do everything from helping to start companies out of our office, what we call hatching, to leading growth stage investments for more mature and established companies. So we can invest anywhere from a few $1,000s at the seed stage to upwards of $150 million at the growth stage, and everything in between. I help to lead our growth investing strategy, where we invest 20 to 150 million in scaled software and consumer businesses. About 60% of what we do is B2B software related. About 40% is consumer oriented, whether those are products or marketplace models. And we have offices in New York, Boston, San Francisco, and Palo Alto.
Awesome. Thanks, Holly. Tyler, do you want to go?
Sure. I'm Tyler Newton, a partner with Catalyst Investors. We're a growth equity fund focused on B2B software and tech-enabled services mostly. Been around for 20 years. I've been at Catalyst since the beginning. We typically target companies with 10 million of run rate revenue or more, 10 to $40 million check size, helping companies scale, whether it's through M&A or sales, marketing, R&D, et cetera.
Awesome. And last but not least, Tanner.
Sure, thanks. So I'm with Build Group. We're an investment firm founded out of Austin, Texas by the former executive team from Rackspace. So we have kind of 3 pillars at our firm. Operator DNA, so our founding team is all lifelong operators. Permanent capital structure, so we raised our funds from family offices, our founders, and high net worth individuals, which allowed us to structure as an LLC and not a fund, giving us an evergreen structure. And then the final piece is this concept of modern business models. So we invest in enterprise software companies anywhere in North America with kind of 4 million in ARR and up. And specifically what we look to do is help those companies accelerate the SaaS business, but also to build marketplaces, networks, and communities around those SaaS businesses. So we will do anything from early growth deals all the way to, we actually just recently announced our first pipe deal in a public equity. So the main underlying theme is this modern business model thesis, and we're building an ecosystem around that with Build Group, our investors, our companies, and their consumers.
Awesome. Thanks, Tanner. So as you guys can see, we've got an amazing panel today. So I'm really excited to kick it off. So first question of the day. So I'm going to kick it over to Holly. So how are PE and VC firms really evaluating the market now? Obviously, there's a ton of capital out there. What are you really seeing?
Yeah, I think there's a lot going on right now. So I think when we first entered this sort of COVID phase, we were really focused on understanding the impacts of our portfolio. We have over 200 companies that touch every corner of the economy. So, some businesses that are exclusively focused on travel or in-studio fitness to, enterprise security. So basically all ends of the exposure spectrum. But for us, as we think about our net new investing activity, there are certainly themes that we're going after that we think are seeing significant tailwinds because of what's going on. So everything related to healthcare, certain streams within healthcare, remote work, enterprise security, and other new digital consumer service models that have been accelerated dramatically. But outside of that, we're really focused on the areas that we know really well. We know this is a strange time in terms of getting to know new investors and entrepreneurs and making sure there's a really great fit from an investment perspective. So we're trying to stick to where we know we already have conviction from a thematic perspective, and really leaning into those specific focus areas. But we closed on our new funds at the end of March, so we are actively investing. We just signed a term sheet earlier today for a new growth stage investment. So we very much are still focused on backing great companies even during this time of uncertainty, because innovation and business cycles don't stop. I think it's really just understanding how pipeline conversions are going to take place over the next few quarters. What is cash collection really going to look like? So you just make sure that these businesses are well capitalized, for the next couple of years as we enter a new investment.
That's awesome to hear. Tyler, what are you seeing?
Yeah, so it's interesting when the markets first started going south and everyone realized what a big deal this was. We first, I think like every firm, did our assessment of how our portfolio was holding up, and just by the nature of what we do, mostly recurring revenue, business to business type companies, our portfolio is in pretty good shape. So we felt like, okay, we've done some of our best deals historically during downturns. Let's get out there. Let's find deals to do. Let's be aggressive. And then, as I've talked to more and more firms over the years, I think a lot of people had that same idea. And so as we get out there, there's still, the investment community is still pretty active, and does seem like there's more capital than there are deals coming to market. So I think most companies are holding back and waiting for what they perceive to be the right time, given that they assume the market's bad. I suspect actually now is a pretty good time to raise money for companies, and it may actually be more of a seller's market than people realize.
That's interesting. Thomas, what are you seeing? Are you still seeing it more of a seller's market too, or in your role?
Yeah, I would say so. I think when COVID started, I kind of would break most of the other firms, private equity firms we were talking to, into three groups. The first one was kind of pencils down for 60 to 90 days, really focused on the existing portfolio. The second group was kind of out bargain shopping, and the third group was business as usual as it can be in the particular environment we were working in. I would say most have moved out of group one and into group 2 and 3. And so we are kind of still seeing quite a bit of activity, and I think great businesses are still raising money in this environment. And I would say valuations for those great businesses are holding fairly steady from what we're seeing. I think with investors maybe getting slightly more structure, slightly more protection on the downside, given the environment. But we've done closed 2 new deals in the last 60 days. And we currently have 2 deals under LOI we plan to close in the next 60 days. So I would say activity on both the investor side and individuals raising capital still is pretty strong despite the market.
Yeah. Well, and another thing that we're seeing too is, the biggest thing that's kind of shifted for investors is all of the Zoom meetings and the virtual interaction. with founders and executives. You know, Tanner, what are you seeing and how are you kind of making that transition to invest more virtually?
Yeah, I think it's a really interesting thought around how, you know, it's not just folks had to get used to the idea of, you know, digesting a global pandemic and what that meant for the business, but also kind of doing the business in a different way. So, you know, whether you meet people at conferences or, you know, you fly to meet people in person and do full day diligence days, those things were kind of not an option anymore, right? So at the same time, when this global pandemic is going on, we were in some ways reinventing the way that fundraising was done. So I think, you know, that's taken some time. I think people have found kind of a much more normal rhythm on that and kind of maximizing Zoom for what it is. And on the valuation side, it's been interesting. You know, you would expect a much bigger reset in valuations, but I think the combination of so much dry powder available, you know, more than ever, coupled with the quick rebound in the public equity markets. You know, as the panel's already said, you know, good companies are still getting funded at healthy valuation. So I think the challenge is more around finding the right fit and figuring out how to make those connections in this virtual world. But business is definitely still being done.
Have any of you gone to any of the kind of just remote conferences and tried that yet? Or have you heard anything about doing that? Obviously, we were entering into a conference season right when COVID hit, when you guys are typically on the road meeting a lot of companies. So curious if you've made that transition and what that looks like.
Yeah, certain members of our team have certainly participated in some of these conferences. I think it depends on the nature of the conference. If it's one of these industry events where it's largely, you know, companies trying to, you know, develop new customer relationships, you know, you could listen into some of these sessions really just as more of a thematic understanding rather than really getting to know businesses on an individual level, because the companies have their own agendas that they're trying to set and get productive out of these virtual events, and you only have so much time, and you know, there aren't these extracurricular activities where you can have some of these perhaps you know, ancillary discussions with investors. But if it's, you know, an investment banking conference, for example, where, you know, they're typically set up where you're just meeting with companies back to back throughout the day, those are still quite productive, is what I'm hearing, because you're still able to engage. And it's actually perhaps a more focused discussion because there isn't all of that distraction of, you know, large rooms and people, you know, being late to meetings, et cetera. So I think there's still a productive activity for some of these virtual events, especially when they are catered to, you know, investor and company connections.
Right. And what about just the, oh, go ahead, Tyler.
No, I was going to say the same thing. I mean, I think we've seen it both people attending the banker conferences where you have one-on-ones. It actually is a more efficient day than the ones when you're there in person for some of the reasons Holly talked about. But also from our portfolio company side, they've gone to some of these as well, been presenters at it, and they found it to be super effective as well, right? Because again, these have that, it's the same kind of structure, but it's actually more structured, more participation. So I actually heard these are going, I haven't been in one yet, but I've heard they're going very well. And I think a lot of people like the virtual format for the banker conferences.
That's
awesome. I think an interesting piece on that, so industry and the more banking style ones, that all makes perfect sense. I think one that I think is yet to be determined, at least from my side, is a little more around the regional events. So there's, you know, a lot of, you know, whether it be Venture Atlanta or Colorado Venture Summit, there's some of these ecosystems, right? There are annual events to bring the ecosystems together. And I think a huge part of the value prop is being able to be there and meet people and spend time with people. And you have your set agenda, but then there's also the ability to just meet people kind of on the fly. And that's been super powerful. So I know those are all great organizations and they've been pouring a lot of resources and thought into how they're going to be able to do that virtually. So I'm personally eager to see what those look like.
Right. Yeah, and you're also seeing a flight of capital toward online event platform companies. I think if we as a venture community thought that this was ephemeral, you wouldn't see this concentration of capital from really talented folks. You know, Hopin's an example of a business we just spent a lot of time with that got funded this week. So, you know, again, I think, you know, the more tools there are to create special experiences, I think this is going to be a long lasting trend. So it'll be interesting to see how it takes shape.
Well, and outside of even the conferences, what are you guys seeing within your portfolio companies that are working from home? Obviously you're all tech investors, and that office culture is such a big part of a tech company. So what are you seeing, and how are they meandering through that?
Yeah,
I mean,
I would say,
go ahead.
I would say most of our companies have seen quite a bit of success in it, and productivity remaining high. I would say from product and development teams, maybe even productivity higher than they've historically seen. But definitely management teams have had to focus on how do we handle culture in a remote environment, and kind of bring the team together. And a lot of them have had success with it, with some of the low-hanging fruit things like you would expect, virtual happy hours, lunches, different things like that. And now trying to kind of navigate the waters of what does reopening look like, and when does that look like, when does that happen, and do you still allow people to work remote potentially part of the time? But I think a lot of those kind of big culture questions are still yet to be answered as we see how the next couple months play out.
Right. Tyler, did you have something there too?
Yeah, I mean, I feel like across the board, everybody's been surprised how well it's gone. I mean, this is even including a company that we have that has 600 people in India and Sri Lanka, right? And they all started working from home, and it's gone well, right? So I think it's really been eye-opening to people, and you get a lot of companies rethinking their real estate strategies now. Getting rid of remote offices, thinking about their footprints. Not just for when we go back and COVID's still around, but even long term. And the big question goes to what someone mentioned earlier, which is, what do you do about the culture aspect? Because that's such a big part of a lot of tech companies' appeal, is that buzzy culture in the office. And now they're realizing, okay, this is still working. I mean, we're tech companies, we can work from home. But what is it going to mean a year from now if people are working from home and you don't have as many people in the office and you can't recreate that environment, particularly for the young people? And that'll be, I think, the big thing to figure out.
Yeah. I would say the young people and new hires, right? It's a lot easier to maintain culture with people that you've been working with, you've already known for a long time. But as you bring on, we have our first new hire starting that we've never met in person in August. Yeah. They'll be starting virtually, and that's just at Build Group proper. And I know all of our portfolio companies, and I'm sure everyone is having similar experiences. So what does that look like? How do you maintain culture? How do you continue to build it, right? Culture is a living, breathing organism that's always changing, right? So how do you guide that in a virtual world, and what does it look like on the other side, right? I don't think we're going to go, from in person, to completely virtual to completely back in person, right? The truth's probably going to be somewhere in the middle. So how you build culture around that is going to be fascinating.
Yeah, and I think just from a sales perspective, probably, a good chunk of our companies have these high velocity inside sales motions, but really the conversion of the traditional enterprise sale model, how is that going to digitize, is still very much a work in progress. And it's really the adoptions of new platforms and software and tools to allow, kind of collaboration and making sure that you're still able to sort of crisply articulate the value proposition of what is sometimes a complex sale remotely, I think is, especially in sort of the enterprise, security world is very much a work in progress still.
Right. And then I know, just connecting with executives and getting to know them on a personal level has been one of the biggest struggles. How are you guys kind of trying to get to know them through Zoom? Are there any tactics that you're using, or things that are kind of helping you to gauge their personality or their culture fit?
Well,
I think for us, it's just, it tends to be, oh, sorry, go ahead, Tyler.
Go ahead, Holly.
I was just going to say, I think everyone knows that this is a less than ideal scenario. So there's a bit more time commitment up front. I think the understanding where having more frequent dialogue over Zoom, having more connection points on a one-to-one basis across the whole executive team and in sort of subgroups. I think there's just more frequency of interaction, which I think is sort of accepted and welcomed by everyone, because it's not just us getting to know the team, it's the team getting to know us as well. And we're trying to also to complement kind of the direct interaction, be creative with respect to references and understanding sort of engagement scores of companies and really what the NPS of the culture of a business is. And our head of human capital and people at GC has actually been an amazing thought partner as we try to be dynamic and creative as it comes to kind of vetting the dynamics of a team and sort of the scalability of a company. One of my early stage partners was actually saying that this is a better time than ever to really get to know somebody personally, because you can have even a Zoom dinner with their families, and sort of there are other people that can be brought into the fold, so you can really make that
you can see inside their house,
and perhaps
which is kind of weird.
You oftentimes meet their kids and their pets and all sorts of things that pop into the background. So actually there is a really humanizing element to how we're all getting to know each other right now.
It's a great point I hadn't thought about. Tyler, what about you?
Yeah, I mean, I feel like actually the adoption of video conferencing as that in some ways made you get to know people better up front, right? It's front loading more in-person meetings. And again, at our stage in DC, it's different because you're doing more things locally. But for us now, it used to feel like it was kind of in the front to try to force someone to get onto a video call, and then now it's very common. And so you do get a little more of the in-person dynamic for each conference call you have, where it used to be more you're on the phone and flipping through a deck, maybe on a slide share. So I actually kind of feel like you're getting to know people pretty well early on in the process. And as Holly mentioned, like the one thing you miss is that the night before the all-day diligence meeting, or the night after, where you have that dinner where you get to have a more relaxed setting. How do you replicate that? And that is where you get to know people personally pretty well. And that's where I haven't faced that yet. Maybe it's you have a picnic instead or something. But you might have to do something like let's have a more casual Zoom meeting where we all just talk personally, or just try to introduce personal discussions, more casual discussions into your Zoom meetings. Try to be relaxed, try to replicate some of that conversation, and I think that just try to build the human connection along the way. You can replicate some of it, but it'll be interesting to see the further into this we get, and if it's still this way, what are these and then you get 2 years hence. Are the relationships the same? I don't know yet.
Right. Well, Tanner, what advice do you have for companies that are looking to raise during these times?
Yeah, I would say start early. I think it's always a good idea to start early and building relationships as early as you can. But now in particular, right? So if a phone call is worth X amount of emails, and an in-person meeting is worth X amount of phone calls, I don't think we know the ratio of Zoom to in-person yet. But what I can say is, for the folks that I've had a chance to have 3, 4, 6 Zooms with, it starts to add up. You really do feel like you get to know them a little bit. I remember one where I was having my first call, and my dog started barking, which I'm sure a lot of people on this call are familiar with, when the package got delivered. And then he mentioned, we're thinking about getting a dog, and then they got a dog, and then I met the dog, right? And then over time you kind of get to know people in a different way. So I think I think that factor is a big one, right? If you're going to be thinking about raising, the earlier you start having those conversations, the better. I think the good news is that people are home and around their computer a lot more, right? There's a lot less travel, and I think it's going to be interesting as folks to think about, what does travel look like going forward, and how much of that is truly necessary. So people kind of have more time in a way to have those 30-minute, 60-minute Zoom calls. So that's what I would encourage folks to just to start early and really start building relationships before you necessarily need to hit that capital raise. That's for our part of the market. It may be different in different parts of the market.
Right. Thomas, what about just the volume? I know you guys at Five Elms do connect with a lot of people. What about the volume of connections and that you guys have seen? Obviously, you got a couple under LOI right now too. So
yeah. So we do kind of have a high velocity kind of outbound sales program, like a lot of our portfolio companies do. So in 2019, we reached out to roughly 10,000 net new businesses, which drives obviously a lot of phone calls into our kind of business development team. And what we've seen since kind of COVID started is our response rates have gone down from, say, roughly 40% to roughly 30%, but the quality of calls, which is an internal measure of both the quality of the business and the likelihood to raise kind of in the next 12 months, has actually gone up from, let's say, roughly 40% up to roughly 65%. So I think, you know, we're still having a lot of quality calls, and I break those calls into two groups. I think it's companies that were planning to raise capital in Q1 and Q2 and are still needing to raise capital. And wanting to raise capital. It just so happened that their fundraising cycle fell as kind of COVID was becoming a thing. I think the other group of people, to touch on what Tanner was saying, is there's more people just exploring their options and getting to know more investors. Given the uncertainty around the current environment, they just want to have a better understanding of who's out there, the different types of investors, and that way, when and if they need to raise, they have a good sense of who are the 5 people I want to have kind of more in-depth and serious conversations with. So I think I would definitely encourage kind of start early and get to know people. As going back to kind of the previous point, it is very much kind of a marriage in a lot of ways. You're going to spend 4 to 6 years working with these people, and it's important to find good investors and for investors to back kind of good people. So, you know, the 2 deals we did in the last 60 days, we did have the benefit of meeting the management team ahead of time. The 2 we have under LOI, one we've met the management team, the other we have not, and we don't know if we will be able to, but plan to proceed with that investment either way, and getting to know people the best we can in a virtual environment.
Yeah. And Tyler, I thought the other day when we were talking, you had kind of some good ideas just on, you know, if you do still feel like you need to meet in person, are there creative ways that you could still do that in this market? I didn't know if you wanted to share any of that.
Yeah, again, we haven't done it yet, but you know, you think about when you go into these diligence processes, you might spend $50,000 or more for one of these market studies that are basically validating stuff you already know. And the question is, all right, you know, could I spend 12 to go meet them in person by flying private, right? And again, I haven't run that by my partners yet, but that's one where you start thinking about the math, and heck, if you're going to put out tens of millions of dollars, you know, it's worth potentially trying to have, you know, meet in person, have a socially distanced meeting of some sort. Again, the question is, does that add value over how you've gotten to know people over Zoom, how you vetted them in other ways? I don't know.
Yeah.
You know, but you know, again, that's the. It sounds like other people on the call have closed deals without going to meet people in person. But you know, I think there are ways to try to do that if you have to.
Yeah. Does anyone else have any thoughts there, or you want to share?
No, I think actually the biggest component that's missing in all of this is the ability to walk into an office and like have a sense of the pulse of the company and sort of the energy and the style. And there's just a lot that you can glean just by observing, you know, sitting in the lobby of an office and
Mm-hmm.
Just the interactions while you might be present for a half day. So I think that is the biggest piece that's missing. It's not so much like the one-to-one, you know, at least for me personally, the one-to-one get to know you. It's you know, how can you really sort through the broader executive team dynamics, the collaboration, the working style. And that's what we're still trying to figure out, and you know, how do we bring in, you know, data or extra touch points to inform that view of the overall style of the team.
Right.
So I don't have a great answer.
We're all
yet.
figuring it out, right?
Figuring it out as we go, because we'll know that we're soon going to be at a point where we have to make a decision. Are we going to back teams we haven't met yet or not?
Right.
Yeah, like, can you run an employee survey or something where you try to understand like
That's a good idea.
how in this new environment, how are things going, you know, relative to the other ways you used to be able to vet it in the office. You know, we have to just come up with ways to recreate what Holly was talking about, because that is super important. That feeling you get of the buzz of the office. It's not there.
Yeah.
Yeah, and at the growth stage, we also have the benefit of information and data. So it's not like an early stage, but where it really is the people and the vision that you're backing. We're also have this set of information, so we understand how the company is performing. It's really just like, how are you going to then scale from here, and is it a sustainable trajectory, which is where the team dynamics really come in.
Yeah. And if you guys had a deal that fell through when COVID hit, like what made that deal fall through? Are you reevaluating some of those now?
Yeah, I'm happy to step in because we did have a fairly long list of committed but not yet closed investments when COVID hit, and we had days worth of meetings of going through everything with a fine-tooth comb, just so we could understand, is there a fundamental long-term structural shift in whatever this business specifically is doing, which we can't ignore as investors. We're fiduciaries to our limited partners to make the right decisions based on the set of information that we have available. So I feel really good about how we went through that process. For me personally, I had one investment that was committed, not yet closed, in a company that we loved, a team that we loved. We just decided to pull back our initial investment amount a little bit, just because it was a sizable investment related to the stage, compared to the stage of the company. And the piece that we pulled back on was actually some secondary that we had sort of been trying to buy up along the way, with the understanding that we would revisit this over the next 60 to 90 days once we just have a sense of like what is happening in this world. And so feel good that we're now, we've lived up to that promise, and we're, in process of buying that secondary piece now that we, again, understand, kind of what the new normal is, and feel like we really have our feet underneath us. So, not everything could go, closed as we had originally intended, but
Right.
Again, really good about how we've now come back around to reassess, knowing that maybe the world hasn't changed quite as drastically as we had maybe thought it was going to.
Yeah, I thought someone that typed into the chat box was pretty interesting. They were saying one idea from just our audience was a way to get to know people is even to be ask the company, can I get into your Slack channels? I thought that was a pretty creative idea. What are you guys seeing from a recruiting perspective at the companies that you invest in? Have they continued to recruit? Are they on hiring freezes? Are there certain levels of hires that they're continuing to make?
Yeah, I mean, I personally had two CEO processes and one CFO process underway, or just started when this all happened. And we plowed ahead with both. We actually closed on, the CFO joined the company, a couple weeks ago. We actually, maybe one person met him in person. None of the people at the company met him in person. And,
Wow.
He started and is off to a great start. We had, another CEO. I'm getting a connection is unstable. Can you still hear me?
Yeah, we can hear you. You were
Okay.
delayed for just a second, but.
Yeah, okay. The the CEO process we have, they did all Zoom meetings. Some actually made it to the office, to the local VC's office to meet people in person. And some were still on Zoom. We're going to do a virtual presentation to the board. And, we may hire the CEO candidate with only a small subset meeting some, the person in person. So I think it's doable, but it's a lot of, you just got to do a lot of reference checking. It actually just shows you should have been doing that all along. But it can be done.
That's awesome.
Yeah, and I'd say we're kind of seeing similar. If our companies were out looking for VP, director, C-suite kind of management level, I would say most of those searches carried on. And then I think outside or below that, it really depends on kind of the business and where they're at, right? So we've got a business that has a virtual event solution. They're hiring. obviously. And we've got others that are kind of pulling back their reins a little bit. But I would say broadly, kind of at the higher levels, if those searches were happening, they continued. And I would say most of the portfolios being pretty opportunistic to see if there's interesting talent that's shaking loose as part of this environment that maybe they wouldn't have access to historically, but kind of high-end people who work for larger companies looking for new opportunities given those changes.
Yeah. And I don't know about you guys, but like within probably the last 4 weeks, it's really felt like the market has begun to kind of shift and rebound. What are you seeing within your portfolio companies? Because it seemed like for a while there, people just didn't do anything. It was more just, triage and making sure we have enough cash. And now I'm seeing companies, it seems like they're going, okay, now we've got to grow. Now we need to start investing in the business. What are you guys seeing? Tanner, do you have any thoughts there?
Yeah, we spend a lot of time with our companies. We're big believers in capital efficient growth, which will probably be a little bit more in vogue these days. But I think for us, how do you continue to play offense? So I think, in a way that's, conservative with the cash flow and all those types of things. But kind of to Thomas's point, I mean, this is, there's been a quote unquote war for talent over the past few years, given how tight the labor market's been. And all of a sudden there's great talent available. So, taking advantage of that and getting, amazing people on your team can change the entire trajectory of your company. So, how are you thinking about that? How, what other things can you do to use capital wisely to, grow the business and stay on the offense? Because the one thing you see time and time again in these types of downturns is that the companies that, are able to maintain strong positions and come out on the other side end up taking, a large part of the market share.
Right. Is there anything that now where we are today, if you would have known that 2 months ago, would you have changed anything as far as different investments or even advice within your portfolio companies?
The thing I think has been interesting is, we did scenario planning of each company, and, we put in place relatively conservative, plans about, okay, this is going to have this effect on churn, on new bookings, et cetera. And then kind of thought through, okay, so this is what we're going to look like. What does our cost structure need to look like? And sometimes you've trimmed here and there. Even in companies that are growing super fast, you start saying, okay, this is what we're going to add in Q3. How many salespeople do we really need? That kind of thing. And thankfully, across the board, the company's been beating those COVID plans. The churn has been less, the sales have been more, with fewer people, right? So then you start realizing, okay, there are probably knobs to turn along the way that where you kind of allow some inefficiencies to build in, and you realize that the capital efficient growth can be had. You get the same growth with less sometimes. So, or you didn't, doesn't mean you necessarily fired people. Then you're not hiring as fast. But either way, it's a you find there are things that you could, it was probably a good idea to do it anyway. And then it got borne out by the fact that it got revealed by the COVID. Now it's unfortunate in some ways. So I do think that hiring will be slower as a result. So I think people are figuring out how to do more with less. Right.
Thomas or Tanner, do you have any thoughts on that?
I would echo that exactly. I think we put a lot of time into scenario planning as to what is the worst that could happen, sales slowing, sales cycles elongating, and churn increasing, which none of our worst fears came true on kind of any of those fronts. I would think the silver lining in doing all that is realizing maybe where there were some inefficiencies in the business as you thought where cuts might need to be made. And so I think while that was a very time-consuming exercise, I think worthwhile to do COVID or no COVID in hindsight.
Yeah, that makes complete sense. Obviously, right now, on top of COVID, we've had a very intensifying awareness of just inequality and the impacts to our society. How are you guys using your brand and your voice to speak up about this? Holly, do you want to maybe kick that off?
Yeah, I'm happy to. Because I think it is first and foremost the recognition that we do have a platform and extensive reach and many portfolio companies. So it's not only our direct voice, but how do you empower the voices of the many companies that we invest in? And so personally at General Catalyst, we did come out early to sort of make a statement. I would say it was a pretty it was a statement of just, standing in solidarity and support and acknowledgement of everything that's going on. And we are now in real time crafting a much more detailed plan of what are we going to do that can actually have lasting impact. I think someone actually came up with a great idea on our team of, how can we make sure that our limited partner base is also a really great representation of our diverse society, because having people investing in our funds and across the venture and private equity ecosystem, that is where there actually could be lasting impact and benefit from sort of the success of the technology ecosystem and landscape. So there are a lot of ideas that we have, and figuring out what can we do that's not just ephemeral and kind of short-term support and short-term resource allocation, but what can have more of an enduring and lasting impact. And we're really fortunate. Ken Chenault is the chairman of our firm. He ran American Express for a long time, and so having his leadership not only through the COVID crisis, but also through the unrest, which actually shouldn't be a surprise to anybody because it has been so enduring and closely woven into our everyday. But it's really allowed us to pause and make sure that what we're doing as a firm, and again through the voices of our portfolio company, can have more of a lasting impact than short term.
That's awesome. Tanner, what are your thoughts there, and what are you doing, and how are you helping? I thought you had some great ideas.
Yeah, I think it can be especially daunting in these times where people want to do what they can to make a difference, and it's hard to figure out what you can do. And I would just encourage people to think about what things can you do kind of day in and day out, not just today and tomorrow and next week, but kind of for the rest of your life, to make the world a better place. And I think in our industry, at Bill Group, we're big believers of networks and ecosystems. And I think in our industry, networks is a huge part of the success that anyone enjoys, whether they're on the investment side or whether they're on the entrepreneur side. So, for us and for me in particular, I'm going to spend even more time thinking about how can I make connections, kind of in that Adam Grant style 5-minute favor of, if you can make connections for folks that may not have the same types of networks or ecosystems, or didn't grow up learning that skill set or whatever it is, how can you make those connections for folks that could be potentially life-changing? And I think if we all do that, I think that's a way that over time we can really make some impactful change in the industry.
That's awesome. Tyler, what about you?
Yeah, so I've been trying to think about how we can make a difference long term, because obviously the situation with the injustices can't be reversed overnight, but it takes sustained effort. And one thing we all have in our industry, and again, like our industry is does not if you look at diversity stats of our industry, they do not reflect that. If you look at the diversity stats of a lot of our companies, the tech space, and it's something where we have to try to do better. So one thing we've actually been doing it for a little while, but not maybe as systematically as we could, but is asking our companies at board meetings to report diversity stats and gender diversity stats as part as workforce stats, because as they start reporting that, right, and it's 2% or something for people of color, and 15% for women, they start realizing, okay, I got to do better at this. I can't keep reporting these numbers. And that's where some of the change can really start to happen. We often negotiate independent board seats as we come into deals, try to make the board more diverse, right? Not just have it be, a bunch of finance guys, right? Try to make the, focus on, make people know you care, that you want the management team to be more diverse, right? From the board level, because that's where our power lies. And something else we've been doing for a couple of years now, just one of those things that you deal with it once or twice and you don't want to ever deal with it again, is making sure the definitions of cause for executive contracts include specifically harassment and things like that, so that it doesn't fall into some gray area where someone who's doing bad things gets a chance to cure it for 90 days or something like that. So it's being able to deal swiftly with these things and just let people know you're not going to tolerate it. Let people know you care. And, heck, if they want to argue against it, that tells you something, right? So I think that's where we as board members in our industry and at our own firms, I think, can really, really try to advance the ball in a sustained way.
That's
yeah,
awesome.
and to kind of feed off that last one, I think in a lot of ways, our platform is our companies and the entrepreneurs we back, right? And so backing great people is one of the most important things in what we do as investors, and that will result in strong leadership through adversity. We've seen CEOs completely shift their business model because of COVID and get back on the right track and see very successful things there. And, we have the benefit of seeing kind of all the messages that our founders are sending to their employees around standing up for equality, and it makes you super proud of the people that you back, and knowing that you made good decisions there, because that's really where it all starts, in making good investment decisions and having successful outcomes.
Right. That's awesome. And then Holly, I know as far as your investment thesis goes, it sounds like, you're still focused on a lot of the same types of companies that you were interested in before. Is there anything that's changed out of COVID, or anything that, has made you look at something differently, or a different type of company that's more interesting, or a different metric that would be, more interesting now than in the past? Or is it still the same?
Yeah, I think it's largely from a thematic perspective. I think we had some kind of short-term, sprints that we worked on, related to both potential value-oriented investments and momentum investments. So there are, certain industries that we've had deep roots in over a really long period of time, like travel, for example. And for us, we're just trying to think about how does the world of travel, how do we envision that world is going to change, and what are the business models and experiences that are really going to, as we come out the other side of this, be long lasting and perhaps have accelerated momentum. And so while there might be this short-term crunch, which is no fault of anyone's, I've never had global pandemic in any one of my underwriting cases for any investment. But it's like, so it's having more of that long-term vision of what do we think are the lasting trends once we come out the other side. I think from a B2B software perspective, we're really trying to understand, the friction of the go-to-market cycle, and how do we make sure we're really investing in the short term behind, great businesses that have amazing natural expansion within their customer base. It may be more challenging to acquire net new customers at scale. And so how do you make sure you're backing platforms that already have those tentacles that they can expand in a relatively low friction environment? So I'd say there are both sector and business model trends that we're focused on.
That's interesting. Anyone else have any thoughts there on anything new that you're looking at, or?
Yeah, I think broadly from a metric standpoint, I think, growth was the thing driving value at a lot of businesses for a long time. I think even pre-COVID, the focus on kind of churn and a deeper focus on churn was starting to creep up, equally important as we were thinking about kind of value of business relative to growth. I think now closer look at kind of cash burn and the ability of a business to survive through good times and bad is something that more and more investors are keeping an eye on. So I think a combination of those three things is what's really kind of driving value today. and where the focus maybe used to be kind of very solely on that top line, how fast are you growing?
Yeah, we believe, we believe the best business models win, right? So, this concept of modern business models around, a classic, if SaaS has been eating the world, just SaaS isn't enough anymore. And, what are you doing for the users of that, that solution and the community around it? The stronger you build those ties and the platform around it, we think those are the businesses that are going to win, the next 10 plus years.
I think overall, COVID has mostly accelerated trends that were already in place, with a few exceptions like travel and restaurants, maybe, and hospitality. But I mean, for the most part, they were accelerating, digitization trend that was already there. And even in some of those other spaces that have been, dramatically affected, the digital players are the ones that are, getting share versus the analog players. So I think it's accelerated a lot of sectors that were already targeting. And one other interesting thing I feel like I've noticed is that SMBs have actually started coming back as buyers faster. The enterprises are all seem to be in this mode of, all right, let's consolidate vendors, let's find ways to cut costs, let's stretch terms, right? Because they're focused on Wall Street, right? So they're kind of trying to they're actually kind of coming back more slowly as they have mandates to, I think, stretch their cash cycles and do a lot of that kind of thing. So it's been an interesting dynamic. They actually almost
counterintuitive. Yeah. So I think now, we're going to open it up for some questions. Bridget, I think you had some people were typing in some questions as we were going.
Yes, it's been a fascinating discussion. Thank you. You've actually answered a lot of the questions that came in throughout the conversation. I'm just glad to know that the worst case scenario models didn't work or didn't happen. So that was great to hear. This might be an interesting one for you all. How are you viewing travel investment opportunities during COVID?
Yeah, I'm happy to answer that one. I think we're just trying to figure out, as we come out the other side of this, what are the experiences that are going to resonate most deeply with people? Is it more domestic and perhaps lending itself to bigger open outdoor spaces? And so we're trying to think through the companies that enable those, what we think could be a short to medium term preference for individuals. So we're definitely evaluating the ecosystem. There are, a handful of companies that we're spending real time with that we think as we come out the other side and people are actually open to leaving the four walls of their home, what are they going to really kind of crave and invest into? And there are plenty of investors that are looking at the travel world of, where is their value that we think is going to dramatically come back. And you look at firms like Silver Lake that have deployed billions of dollars into the travel industry specifically since COVID. They're a very smart group of people. So I think they have a deep thesis as to how things are going to start to come back. So there are a lot of ways to approach the market. There's there's been short-term impact perhaps on valuation because we don't really know yet where the bottom is. So there's still a lot of risk involved because we don't really know when things are going to start to turn and what it's really going to look like and what our comfort levels really going to be. So there's that value-oriented play, and then I'd say there's the innovation play of what do we think is going to be a long-term new way of thinking about travel that we're investing behind as a firm.
Another question, thank you, Sunit, for this one. It's more of a comment and kind of an overall asking for your thoughts. But Sunit says, I work with several PE firms in due diligence and board roles, and we are doing new deals only if we know the management and CEO from prior dealings. We are not writing new checks more than 25 million if we don't know the management. Also spending time on company liquidity. Most PE firms will not be back in the office at least until after Labor Day. What is your overall thought on this?
Yeah, as I mentioned.
Oh, sorry. Go ahead, Tom.
as I mentioned, we do have kind of a deal coming up that was a net new relationship since COVID started, set to close in the next 60 days. And we're using Zoom, we're using all the virtual tools we can to kind of build that relationship, and again, make sure that we're backing good people. And so we do plan to close that transaction, whether we're able to kind of meet management live or not. So there's still some time to figure that out. But I think everybody's kind of getting used to what is this new norm, but maybe just kind of handling it in slightly different ways around whether there's thresholds on the investment size and such as to where they can get comfortable.
Yeah, I was going to say, we aren't as limited as that. Obviously that helps. Or can you validate it by, I know some of the other investors in here, or can I validate it by, we have an operating partner that, knows the space, who's coming in to help oversee it. Like, there are other ways, I think, to validate what is trying to be validated by that comment. Because I do think if you only back teams you already know, you do limit the opportunities.
Another question here, would lower valuations actually help to increase funding opportunities, or are investors waiting to see the long-term effects of COVID before making any investments in certain categories? Any thoughts on that?
I think
in certain instances, we're seeing valuations hold or actually increase. There's definitely been a flight of capital to really great companies. So I think there's no two situations that are going to look exactly the same based on the dynamics of the market and the business model that a company has. But I think we're seeing, given the public market performance through all of this, there's typically sort of a 6-month lag between, public market performance and sort of private market valuation impacts. And we have not seen sort of depressed valuations now that the market really has come back. I think in the immediate COVID era, where there are companies that were closing on rounds, I think if you surveyed every investor in the country, I'm sure there was a certain percentage where there was valuation changes to what the current structure was, just because there was so much uncertainty. But now that we have a little bit of better understanding as to what the next couple of quarters really could look like, valuations have held pretty well.
And I would encourage entrepreneurs and executive teams. Easier said than done, but valuation isn't everything, right? I think in a market like this, who you're working with, what they can bring to the table. I mean, all that stuff really matters, and who's going to help you get to the other side in a strong position. And also, be aware of the terms to the deal, right? It's not just top line valuation. So, it's an all-encompassing picture. So I think. Valuations are kind of all over the map for, different parts of the market, different parts of the country, different industries. And I think that's going to continue. I think it's tough to say, well, SaaS companies usually trade in this range. Well, SaaS companies at what stage and what industry, all that is going to be, somewhat dislocated for the foreseeable future. So I think people need to really take time to think through, what does it mean for them, their company, and kind of where they invest.
Yeah, and one thing I always try to encourage entrepreneurs is to really understand what the expectations of your investors are from a return standpoint, and understanding in their heart of hearts if that's actually achievable. Sometimes, if an investor is valuing your company at X and they're looking to make 3 to 5 times that, let's say, what size business do you really need to build to achieve that kind of return and exit valuation? Because as soon as you become misaligned with an investor on the kind of path to that return profile, it's not an ideal situation. So, there are times where, we have, really great self-aware sort of founders that know that there's a certain band that just makes sense based on where the company is in their trajectory.
Thomas, do you think that it's possible that the various stimulus packages have created a lag? In other words, the economic impact has not been fully felt by many companies?
Yeah, it's an interesting question. I think I did have one deal that I had been working on actually for a number of years, who was planning to come to market in Q1, Q2, and was able, this business is actually based in France, was able to get, 2% debt from the French government. I can't compete with that, obviously. So they pushed out their fundraise by kind of 6 months to get kind of out of, or hopefully get out of what is the COVID environment, and raise capital in kind of more normal times, or a new normal time. So, that's a example, and I'm sure people are seeing examples like that all over the world as governments do provide this stimulus to get people through.
Yeah, I mean, I have to believe, that it's masking. I mean, if you look at what the stock market's been doing, it has to be driven by the Fed and stimulus packages and all that, because I mean, the economy is not coming back. So it's a, again, like, it's always hard to know. It's usually better to be bullish than bearish. But with all the stimulus, it's hard to really know what the underlying trend is. So it's a, like, is there another shoe to drop in a couple of quarters? Maybe. But, we don't invest like that. We're investing for 5 years or more. So, we have to look through the cycle, but it is, the stimulus has definitely had a big impact on people's confidence.
And we're 1 minute over, so we may not be able to get to all of these questions, but let's end on this last one. Have any of your firms adjusted your investment criteria in response to COVID?
Yeah, I'd say we tried to just make sure we were focused on quality in the near term, and try to figure out what kind of companies can we vet the team, like we talked about before. Again, how long can you maintain that, because that's a more competitive part of the market, right? So I think we tried to just up tier maybe the quality focus. Not that we didn't focus on quality, but I think that's maybe a little bit of the kind of risk adjustment we make in this environment.
Yeah, I think, no one on this panel is traders, right? We're long-term investors and holding businesses for 4 to 6 years. So I think, I guess the only thing that kind of really changed in our evaluation and criteria is, will there be long-term lasting effects on the businesses we're looking at based on what's going on today. But that's kind of a minor tweak, given kind of our hold periods are much longer term, and hopefully this is, or the majority of this is short term in nature.
Yeah, no major changes on our end. If anything, we've drifted up market just a touch in terms of the size of businesses we're focused on. But I would echo what the rest of the panel said so far as well.
Awesome. Well, thank you guys. Honestly, thank you so much. Thomas, Holly, Tyler, Tanner. This was really insightful. Thank you for your time. And I know, Bridget, we've recorded this, so anyone that has signed up for the webinar or joined us today, we'll be sending out a link as well. So thank you guys again, and have a great day.
Thanks,
everybody.
Thank you, everybody.
Yeah.